All right, you guys keep eating, keep grabbing food, get up and go to the bathroom if you need to. We're going to cover a lot of stuff tonight. I first of all want to thank, hey Kamar, didn't get to say hi. Mr. Mayor, thanks for coming. I didn't get to say hi to a few people coming in, but I want to thank you all for taking time out of your busy lives and schedule to be here. For those of you that don't know me, I'm Erik Peterson, owner at Proven Realty. We also run a business advisory business to help you buy and sell your businesses called Proven Business Advisors. Really, it's great to be here. My partner in business, Chris Jundt, he's over at First State Bank. One of the smartest minds you'll meet in all of finance, anywhere in North Dakota, I can promise you that. And a good guy too. And not surprisingly, a way better pickleball player than he looks. So we'll hear from him. We'll hear from him later, but yeah, I've been here 15 years. Everybody has their own Williston story. My story began, I was a financial advisor in Missoula, Montana. Was making a really good living, had married 4 kids. Life couldn't have been any better. And then my best friend went bankrupt in 2009 and 10, watched him lose everything. He lost a 7,000 square foot house. He was just absolutely killing it. But that economy hit a lot of people. And I said, you know what, why don't we buy a semi truck to help you feed your family in North Dakota and see where it goes? Within 5 months, we had 6 trucks. Within a year, we had 20 trucks, and I bought and sold 5 different businesses here. We were doing really well, making a lot of money, but it wasn't until we came across a little piece of property north of Williston in the middle of nowhere that we put under contract, and I flipped to an apartment builder and made $1 million. Literally $978,000 after paying the attorneys, the engineers. It wasn't until we cleared almost $1 million without even owning the dirt that I said, you know what, this real estate thing is something special. I always thought I was too good for real estate. Both of my parents back in Missoula had real estate licenses. And I was like, you know, that's something you do on the side when you're not selling furniture like my mom or investing in commercial properties like my dad. I was a kid at 7 years old that was painting our commercial building. Hello, welcome. And so at that point, I knew real estate in Williston was something special because we made $1 million. Then started going around and doing these types of events all over the country, speaking at investing in Bakken businesses in 2012, 13, 14. We had a good team. We went all over the country and it was so much fun. And what I did through all of those seminars that we had is we brought a lot of people that were suffering and losing money and almost losing everything they had all over the country and brought them to Williston to set up over $1 billion worth of projects. It was really fun. But the problem was I did all the work and the darn real estate agents made all the money. So at that point, a decade ago, I decided to get my real estate license. I've had it now going on 11 years. Bad time to get a real estate license if you remember 2015. The market went down, we were losing 4,000 jobs a month, and I had to do literally whatever I could to pay the bills. So what did I start doing? I started stalking campers as they came into town. I would then guide them to one of the RV parks I had a relationship with, and they paid me a whopping $50 for every one of these things that I brought in. It does not pay very many bills when you have 6 people in your house to feed on $50 a month, but I was able to do it. But it wasn't until I went into the Bluffs of Williston, you guys might know where that is, kind of over by Mega Latte up on the hill, walked in there one day and said, wow, I see you have an empty parking lot. I can start helping you fill these apartments. Went into Cammie's office and said, hey, I would love to put heads in bed, start paying me. And she said, absolutely not. I've got 7 people full-time that are doing what you say you're gonna do. I don't need your help. At that point, I didn't really know what I was gonna do. She called me a couple weeks later and said, you now have my attention. I think you're arrogant and I think you talk too much, but I need help filling these rooms. And the rest is history. I stole her away from that company. I started Proven Realty 7 years ago. And 7 years ago this week, I made her a promise that I can only pay you half of what you're making right now, but I want you to come work for me. But I promise me you'll never have to come back to North Dakota. She was traveling from Western Washington. So if you haven't met Cammie in the back, you now realize we got her for half of the price, the best deal we ever did out here. And we've done now 1,400 deals in real estate. We have a team of 35, and we have quite a few investors, much like yourself. So throughout that process, people just keep showing up on our team. They like what we're doing. They like working with us. We do things a little bit differently. And it's not because of me. It's because of her and what she's been able to do with our 14 people in operations. But what we found, nobody right now in Williston is educating about the investing markets in real estate. We're living in one of the best places to be in America. I do a lot of traveling all over the country. And in fact, Laura and I were down in Scottsdale, Arizona last week for a top producers mastermind. There was about 200 of the best agents out of the 89,000 at our company, eXp Realty, and we talked about them. We talked to them and found out that in most of these markets around the country, it is a 10 to 11 month inventory. The absorption rate is 12 months in some places. If you live in Miami, it's 14 months. So imagine putting your property on the market and hoping to sell it next September or October. Not a very good market to be in. We've got high interest rates, we've got kind of a crazy economy, we've got a lot of people losing jobs, the economy's contracting, inflation's been stubborn, and we're lucky to be here in the greatest place in America, in North Dakota. And we're gonna talk about how to take little bits of money in your life, how to analyze deals, how to finance deals through people like Chris and their bank, and more importantly, how to set you and your family and your future, set it up together strategically. So thanks for coming. Lovely wife is gonna be in charge of, there's no projector button, so go ahead and change the slide. Again, here's our disclosure, we're required to read it. We are not real estate attorneys, we are not accountants, we don't know really anything about those things, and any advice that we give you tonight is just our own opinion, so don't sue us. You are all big adults, and there's really nothing to see there, all right? So who we are, like I said, we've happened to win a lot of awards. None of that really matters to most of you in the room, but for the few people that actually care, yes, we sell a lot of real estate, but the proudest thing that we have is we help a lot of people change their lives, get into houses, get into properties, and specifically cash flow on investments. And last year, our claim to fame is on every single real estate team or brokerage in the entire state of North Dakota. Our little team here that you may not have even heard about in your own hometown did the most sales for the most volume. We sold 279 transactions and 87.1 million last year in a market that contracted 30% in Williston. So anyway, not to brag, but something to be really proud of, and that's because we've got great people behind the scenes. And as you've seen, we've been able to do it consistently year over year over year, and we're just getting started. It's such a fantastic community, and we want to do whatever we can to help you with any of your real estate goals. All right, a couple of the national trends. Anybody else excited about interest rates finally going down today, except Mr. Jundt over here? Like, if you have not been excited that the Fed actually pulled their head out right now and actually has a trend of the downward direction, Chris is going to talk to you what that means. Let's be honest, it's all priced in. It's only impacting the Fed funds rate. For most of you, it's already been priced in. And the good news is we have one of the best mortgage lenders in the entire state sitting in the front row here, and she's loving life. Julia Hill, if you haven't met her, you need to. She is fantastic. Okay? Couple of things on a national basis. We're typically trying to sell between 6 and 7 million houses a year. We're at 4 this year. So statistically as a country, that'll be one of the slowest years since 1995. So economically across the country, there's a lot less real estate deals. And as we all know, most people know 10, 20, 30, 50 real estate agents. They're literally on every corner, probably holding a sign saying, please buy this house. It's been on the market for a year. A couple of other things. Purchase loan applications are finally up, and people are starting to think again about refinancing. So if you happen to buy a property in the last couple of years, 6.5% to 7%, talk to Julie or somebody like her. Now is the time to start thinking about refinancing to put more money in your pocket and lower your rate and reduce your overall income. Builders nationwide, we also keep a house in Arizona, and they're building tons of houses down there. There's 30,000 of them on the market. Those builders are still cranking out 2,000 units a month. 2,000 units a month. But at a 10-month supply from builders are going to start pausing the brakes and slowing down. It's just one of those things that you can't do if all of your money is tied up in lots and inventory and you need to make money. We're hoping that those interest rates will really help the cause. Okay? And then the other thing is I would be looking here is a lot more people, especially around the country, are looking at foreclosures, or they're in that pre-foreclosure. Instead of waiting for these deals to hit the auction block, you need to start doing your research. AI makes that very easily, and you want to find people that are starting to get in trouble before it's too late and the banks take over and they lose control. Right? All right, what about our Williston market? It's unique and it's different. And when I go around and speak at these events, people can't believe that we don't really have an Airbnb market. We don't really have VRBOs. We don't have short-term rentals. They're very hard to find. In fact, good luck trying to find a single family rental, right? You could, if you had a house right now, pop it on Facebook and you're gonna get 50 to 100 inquiries. A lot of those will be spammers and most of them probably can't afford a down payment on a house, so they're looking to rent. But our market here is very, very strong and at a high rate, and we'll be talking about those numbers here momentarily. And the other thing we know is we also have one of the best builders in the area, Matthew Pardue, back here. How much does it cost on a per foot basis to build a good quality house in Williston right now? $250. $250 to $300 a foot just to get started. We live in the geographic center of North America, so supplies are crazy here. It costs a lot of money to run this, and we still have high land and improvement costs. And even though we have Mark Schneider, one of the best guys you'll ever see, to get these things through quickly, it takes a while on the grind to get your permits, to get everything set up, and to find subs that are reliable to come here and build you a house. So because of that high cost of building and the high cost of entry, if you are a real estate owner, this is really the best paradise that you could find. Average sale price right now, $390,000 in our market. That's in the 58801 zip code. And we're gonna go through some other stats as well, okay? One of the great ways to get educated on the market and help you make better informed decisions is to know the numbers in the market. And I promise you, if you ask the average agent here in our town, these key performance indicators on how our market's doing, most agents don't know. No offense to any of the agents, they're just kind of in their own world and don't pay attention to the data. So how do you get the best data? You could go right to our website, provenrealtynd.com, click on the market report button. It's totally free. You can check any zip code in the entire country out, and you will see a report like this to talk about the demographics of the market, the key statistics, and exactly what's going on. A couple of things you'll know. Matthew's right, it's about $250 to build entry level. Prices here, the average price on the market is $199. That's also taken into consideration a lot of those houses that are built in the 20s, 30s, 40s, or big houses that have much lower cost per foot. And then the other thing I really want you to take a look at is price decreases now 32%. That's the highest number that we've had in over 4 years. 1 out of 3 listings that are on the market have had a price drop, and we are coming off in Williston the slowest market that we've had in a summer in over a decade, including through COVID. We now have 79 houses on inventory as of Friday. That's the most that we've had in over 3 years. The good news is builders are actually building twice as many houses as we found out today in our mastermind that they typically have over the last 3 years on average. We do finally have some new build inventory, but people are waiting for interest rates to come down before they jump in. Don't be that person. If you're looking to get in, now is the time to lock your price in. You'll have way less competition in the future. And if rates do come down, you call Julie up, lower your payment, and get a better rate, okay? All right, market trends. The other thing that I want to point out to you that are really key statistics of months of inventory, AKA the absorption rate. In other words, out of all the inventory that you currently have on the market, how long does it take for all of it to get under contract? That's your absorption rate. It's like a sponge going to absorb in there. We're at 2.37. For the longest time, that number was 1.5 to 2 months of inventory. Typically, we're in a seller's market. Once it hits 5 to 6 months, depending on the statistic of inventory, that's a balanced market. Anything over that is a buyer's market. So it is officially still a seller's market. If you have a good property, if you market it correctly, if you price it right, it is getting a lot of action on it right away, and it's usually gone within hours, not days. The other thing that's really been interesting is our sold to list price here. If you list your house at 100 grand, what price will it actually get sold and across the finish line is now 98.5%. So if you're looking to make an offer on a house, it depends on the price range that you're in on how much you can expect to receive at a discount off of that listing price. The higher the price, usually the more room there is for negotiation, but there is a sweet spot in that 375 to 425 that number is over asking price. Everybody wants that move up house. Those houses are going for 102 to 105% of list price. So depending on the price range that you're looking for will be how aggressive you need to get to win that offer, all right? Median days in the RPR is 10. That's how long it takes from the time a property in the average price range comes on the market till it's under contract. 10 days is all you have. So what do? You need to make sure to have all your powder dry. and you need to have your pre-approvals in, we always recommend a local lender. So many times have you seen a really great rate on the internet on one of these, online companies that look like they're going to shoot you into space, and they suck you in, and then all of a sudden they have all these hidden costs that you don't know about, or it's time to close and they never call you back. So find a local lender, find somebody here that's going to go to bat for you, and find somebody that if the wheels fall off the bus that you can go and have a face-to-face conversation with and help get the deal done. All right? A couple of other statistics and all this stuff will be available. And for those of you that want to take notes, you're welcome to. But at the very end, we're going to have a scan code. All you need to do is scan it, and the presentation will download to your phone so that you can review it later. A lot of these things are great detail and give you something to gnaw on later. And certainly if you have any questions, you can let us know. All right, you can see a couple of statistics here. Median estimated value. In other words, every single house that's available in this area to live in, the average price is $350,000 in 58801. So if you look at that, our houses have been climbing at a higher rate for the last decade than the rest of North Dakota and the rest of the country. That growth has not really gone up as well in the last couple of years as we had the COVID drop here where a lot of houses took off, but we're catching back up on a percentage basis. All right, months of supply, 2.37. As you can see, back in 2020 in COVID, we had about 5 months, then it dropped down, and you can see sharply, we're starting to see that jump back up at the beginning of the year. That's related to interest rates. A lot of these deals weren't penciling, and a lot of properties were sitting on the market as well. Okay, we're now going to talk about the different types of real estate investments. Just because you want to invest in real estate and you want to be a saver and have passive income coming in, there's a lot of avenues to go into. You can go into land. I did that in 2010. I bought 40 acres here. I divided into 5-acre parcels, ended up selling those off individually to oil field companies, was able to triple my money in just a few years. Really a good way to do that here. However, there's not a lot of land moving now. So it really depends on interest rates, the demand, and what is hot right now. You can certainly get into single family, duplexes, multifamily. I like industrial as well. Industrial's been really good for me, and we've done a lot in that space. Big giant shops with good tenants, and that has gone really well. We've got a bunch of those, okay? All right, benefits of real estate. Everybody knows about diversification, right? Quick show of hands, how many people have money invested into the stock market in some fashion right now? Anybody? Yeah, most of us do. 401ks, it's easy at IRAs. You should be putting money into your Roth IRA. If I was putting my financial advisory hat on now, it's tax-free growth. But again, how many of you people right now think that the stock market should be the highest that it's ever been and that the economy is as good as it should be? Anybody? No, right? That is, I guess, the nature of the beast of the stock market is there's a finite amount of people investing all the time that's pushing those prices up. But let's be honest, when you start looking at PE ratios that are 20 and 30 times, that's how long it takes for these companies to make money to pay you back. It is ridiculous. The one thing that I like about real estate is you can touch it, feel it, hold it. It does take a little bit longer to sell, but it gives you greater diversification, gives you longer term appreciation. And in fact, statistically, it's one of the few asset classes, real estate is, that over a 10-year period, prices in the United States have never gone down in a 10-year period in real estate in the entire country. 10 years, as long as you can hold 10 years, statistically 100% of the time you would have gotten your money back in the average real estate market. Stocks can't say that, bonds can't say that. There's really nothing that's going to give you the upside potential of real estate that can say that. And the great news is we also have a lot of really good tax benefits, especially under the big, beautiful bill. No, you're okay. Yeah, you're okay. The big, beautiful bill will allow you to have 100% bonus depreciation to allow you to write off more money to then save money not only on the real estate money that you're making, but also on passive income as well. So, all right, now we're ready. Thank you. Okay, these are the top 3 must-know strategies when it comes to real estate investing. Some of you like to buy and hold. That's me. I'm typically not trying to be a flipper, just not my mentality. I'm a lot more conservative than a lot of other investors. But the idea is there, you want to buy something that you're happy with, that you know you want to own in the future. As long as it's cash flowing, as long as you have a good tenant, as long as it's not a huge headache, as long as you're getting a good positive net return on it, why would you sell it? And we're having a tougher time now finding replacement properties because things don't pencil like they used to. Number 2, house flipping. Anybody in here bought and sold houses on a short-term basis before? Any flippers out there? Okay. Yes, I bet you have. And you built a whole bunch of them too. You should be up here actually. But yeah, we've done that as well. I was able to go to an auction a few years ago. It was down in Watford City, bought a property on a tax sale auction for $30,000, put it under contract the next day for $160,000. I made $130,000 overnight. Not a bad time to be a flipper. It just so happened to be that I knew what I had my hands on, but would not recommend trying to make a strategy on that long term, right? Every now and again, you'll catch lightning in a bottle. And then real estate investment trusts are similar to a mutual fund where you pool your money together. A REIT is basically just a compilation of properties to allow you to invest into. They have different holding times. A Delaware statutory trust or a DST is similar, good tax advantages to pool your money. But in this market, you guys live in one of the best places economically to get into real estate. You should be buying your own single family or multifamily properties. Okay? Tips. You got to come up with a plan, right? If you don't know where you're going, how do you know what you need to do to get there? You need to have a strategy, you need to have a plan, and you need to be financially disciplined and have some type of a budget or some type of a time frame. You're going to need to be thorough with your research, right? Just because it feels and sounds like a good idea, you want to make sure that that investment is going to cash flow even if you don't have a tenant, and that you have enough money in the bank to pay that payment, and that you're not going to cause financial harm to yourself and have to get foreclosed on. Okay? Build your professional network effectively. Out here, just as important as it is to get an investment, you really need either a property manager, a maintenance person in case, all of a sudden you got a frozen pipe. We've had plenty of those. And then more specifically, you need to have somebody here to help you manage if you're not there. So if you're an out-of-state investor, if you don't know property management, if you don't know how to fill these properties up when they become available, you need to have a network of people, and we can help you with that. We've got a pretty good Rolodex of subs, service providers, lenders, title people as well to help you through that. And then the other thing everybody needs to do that they don't really look at is assess your risk. Every single investment in real estate has a different level of risk, depending on the type, depending on the tenant, and the banks, and we're going to talk about that. These tightwads over here that you got to go to beg to get your money, they have different various criteria for that, and if you do that the right way, they turn out to be your really best friends, and they're really great, and they can be partners in your investments as well. You need to understand the local real estate market. We've shown you a resource on our website to go look at. It's really great to be up to that. And especially in our market, it's changing weekly. You just need to stay in touch with all of the recent trends and data. And then find somebody else out there that you can rely on for information. If you have a question, you get into the weeds, you have a problem, who do you know that can help you wiggle out of that or give you advice? How do I get a tenant out of here? What's the eviction process like? Who do you know that now needs to fix my roof or foundation? How do I deal with insurance companies? I got the lender looking to change my payment plan. We've seen that lately as well. Something that we can certainly help you with. All right, different stages of real estate investing. And we would say, number 1, get your financial affairs in order. Save your money. We typically recommend 3 to 5 months of living expenses in a cash scenario as a cushion before you start dabbling into real estate in case you lose your job or have an accident or something comes up with your vehicle. So get your financing together. Secondly, do you have the ability to enhance your property? I mean, look at me, I am not a handy guy. There's plenty of handy guys here. If I buy a property, I might be able to paint it, might be able to put in some flooring, but if it comes to electrical, roofs, foundations, any of that, you want to really know what your limits are going in and prepare your budget accordingly. You will get absolute sticker shock here when you see how expensive it is to hire somebody that does this for a living that can go work out in the oil field $50, $60, $70 an hour. It's going to be exorbitant to get them to come do your stuff. So will that property fit your needs, and will you be over your skis? For me, most of the time it's yes, it is. You got to have people around you that are handy and reliable that can get that stuff done. And then profit realization. It's just like anything. If you find a good property, does it make sense to sell it? What does your exit planning strategy look like? Are you taking into consideration your holding costs, your opportunity costs, and more importantly, your net after-tax return? Just because it feels like you should be selling your investment property, where are you going to put your money to get an equal or better return? And more importantly, once you sell your property, what does that look like from Uncle Sam's standpoint? How much of your return are they going to take? And we're going to talk about some advanced strategies later on how to defer and how to kick the can down the road and how to reduce your overall income tax. And then finally, making sure that you understand where the trends are going. We run a monthly mastermind. We just happen to have it today with local business leaders around the area where we talk about what's going on in your life, in your business right now, so that we can help advise our clients. We got some really good intel today at the mastermind about what's happening out in the field. It looks like it's brighter in the future than it was in our last couple of meetings. There's good things here, and people are already starting to talk about what interest rates lowering are going to do and next year's budget. So really excited about the future here. And as Mark said, all the big things that are coming down the pipeline, not just in oil, but in other related industries here. We've got crypto, we've got data mining, we've got some really good energy projects here that will help this area grow and help push up real estate prices. All right. And then the last thing before I turn it over to Chris here is the 1% rule. Anybody hear of the 1% rule? Okay. Seems pretty basic, but as you're analyzing a deal, can you get 1% of that on a monthly gross revenue? That is the minimum that we look at. If you're looking at a $250,000 property to buy, all in, you've got to put in your holding costs, you got to put in your improvements to get this property rented. Can you rent it out for $2,500 or more? It's a really good quick litmus test, and it's been a national rule for some and works well. Doesn't really work in other areas. Like I said, in Missoula, a house here that would be 250 grand would be 600 there. A house here that would rent for 3 grand would rent for 2,000 there in some cases. So you really just got to know your numbers and your data, and that will be beneficial. All right, so next I want to turn it over to Chris. I met him through our first bank loan. His company, I bought the old Schlumberger building back in 2020 here. They did the loan for us. They were great to work with, super professional. I worked with another lender, and we started having monthly masterminds there. And I was like, this guy knows more about finance and investing and banking than anybody that I know. And then was lucky enough last year, I had a client looking to sell 24 condos at the Stony Ridge condos up on the hill. Showed it to all my investors and all my clients. Him and I sat down for lunch. He got it, he saw the numbers. This guy is the senior loan officer at one of the bigger banks here that's been doing it a long time. He said, yeah, I want in on this deal. And we were lucky enough to partner up together. Not too many people that I would partner up with, but not only is a great friend, he really knows the investing market and really knows financing, and definitely the smartest guy I know. And now I don't need to know all that finance crap anymore. So anyway, Chris Jundt, everybody.
Thanks, Eric. Good evening, everybody. Thanks for coming. As Eric mentioned, Senior Vice President, Chief Lending Officer here at First State Bank and Trust, local financial institution, primarily here in Northwest North Dakota. Been in banking for 22 years now, with the bank for the past 14, and the Chief Lending Officer for the past 12. So gonna try and approach this from both sides of the table, I guess is how I'll describe it. I've been on the banker side of things and looked at literally thousands of deals. And I've also been on the other side of the table trying to sell the deal to the banker to get financing. So I think I have maybe a little bit of a unique perspective there, being on both sides of the table. Hopefully you'll come away here this evening with some strategies, some ideas regarding how you can look at potentially structuring financing for your investment needs. So next slide, please. What we're going to cover here, types of real estate financing that's available, some different financing programs, give you a few examples, walk through those. Going to go through underwriting criteria. That's going to be standard 5 C's of credit that pretty much every bank's going to look at. And then end with some tips, tidbits that maybe will put you over the finish line in making your deal bankable. Next slide. All right, so types of real estate financing, have it broke out into kind of the 2 main buckets here related to commercial real estate. First, owner-occupied commercial real estate. That would be if you own a trucking company and you want to go buy the building to operate your business out of. If you want to start a restaurant and you're going to buy a piece of commercial real estate. Typically, banks are going to go a little bit higher on the loan to value on that than an investment property where it's non-owner occupied. So owner occupied, typically 75 to 80%. There are different programs, USDA, SBA, Small Business Administration, where you can get a little bit higher. We'll walk through one of those examples. Typically going to be a little bit of a longer term on owner-occupied transactions, 20 to 25-year amortization. Generally going to be a little bit lower on the interest rate for owner-occupied relative to non-owner-occupied. And then shifting over here, non-owner-occupied, that's going to be your investment properties. If you want to buy an industrial building and you're going to lease it out to Continental Resources or Marathon as an example, 70 to 75% loan to value. And when I say that, round numbers here, let's just say you're buying a property for $1 million, non-owner occupied, bank would look at loaning somewhere between $700,000 and $750,000 on that property. A little bit shorter on the amortization. There's more risk associated with non-owner occupied commercial real estate, so 15 to 20 years typically on that amortization, and a slightly higher interest rate on those non-owner occupied properties. Next slide, please. So different financing programs. Conventional, what that means, you're just getting the loan directly through the bank. There's no Small Business Administration involved. There's no USDA. Loan is directly through the bank. SBA, two of the most common programs through that is going to be SBA 504 or a 7A. Bank of North Dakota, going to be very specific to the state here. North Dakota is the only state in the country that has our own state-owned bank. Tremendous asset and resource to people looking at investing in the state of North Dakota. They have tremendous programs with interest buy-down. They also have participation programs where they have some lower interest rates where they will participate with a bank like our bank or other local financial institutions. What that means is our bank maybe funds 50% of the deal. Bank of North Dakota comes in and funds the other 50%. And we'll walk through an example of that here. Next slide, please. So this is an example here comparing just a conventional loan to bringing in the SBA with the Bank of North Dakota. So over here on the conventional, $1 million purchase, 80% max on the financing, so $800,000 on the loan. Rate on that typically going to be fixed for a 5-year period, and then it would adjust every 5 years after that, based off of a predetermined index, typically going to be either Wall Street Journal Prime or Federal Home Loan Bank plus a spread. In this example, using 7%, 20-year amortization puts your estimated monthly payment at about $6,200 per month. And the cash needed to close that deal, $200,000 plus closing costs. On the other side here, this is the same purchase price of $1 million, but funding that through the SBA 504 program. Caveat to the SBA 504, they typically do not do non-owner occupied commercial real estate, but if you are looking at purchasing a piece of real estate for a business that you're going to operate out of, that could be a hotel, that could be a restaurant, that could be a trucking company, this program would fit that. They can go up to 90%, so only $100,000 plus closing costs needed in this example. Really helps keep your cash liquidity within the business. Or if you're a little tighter on cash, newer business, you can get in with a lower down payment with that SBA 504. With the Bank of North Dakota FlexPace, that has the interest buy-down component. If it's located here in the city of Williston, the city of Williston has what's called the Star Fund. They pledge a certain amount of dollars depending on how your project scores. And then Bank of North Dakota through the state matches that on approximately a 2-to-1 basis. So hypothetical example, Star Fund awards you $50,000 for interest buy-down. The state will match that with about $100,000, so total buy-down of $150,000. The program can buy your rate down on the bank portion up to 5%. So if your bank note was 7%, with the buy-down with 5%, brings your net rate on the bank financing down to 2%. Literally unheard of anywhere else other than in the state of North Dakota. The bank's still going to be at that 20-year amortization, but the SBA can go up to 25 years. You can either do 10, 20, or 25-year term on the SBA portion. One advantage with the SBA as well is they are going to fix that rate for the entire term that you choose. So it takes a little bit of that interest rate risk, interest volatility out of the equation. When I put this together, the 25-year rate was at approximately 6%, so about 1% less than what you might expect on the bank loan. Calculating out those payments, you're at about $5,300 a month compared to the $6,200, and you're borrowing $100,000 more. So if you are looking at starting a business, if you're looking at acquiring a piece of real estate to operate your business out of, SBA 504 with the Bank of North Dakota FlexPace program, by far the best program out there. Next slide, please. All right, this one takes a similar structure, but this would be eligible for those non-owner occupied properties. So if you're looking at buying an apartment building, if you're looking at buying an office building that's leased out, this structure would fit that. Conventional financing, same as the prior slide, but here we're looking at the Bank of North Dakota Business Development Loan Program. Erik mentioned that we partnered up on 24 condo units last August. We took advantage of that program in conjunction with a local lender. They can participate up to 90% of the project, not to exceed $1 million. So there are some caveats to that business development program through the Bank of North Dakota, but again, the advantage to that is a little bit lower interest rate, approximately 1% difference between that Bank of North Dakota program and the conventional program through a local financial institution. Next slide, please. All right, so underwriting criteria. What do various lenders look at? We like to refer to it as the 5 C's of credit: character, capacity, capital, collateral, and conditions. So we'll just take them one by one here. Character, what we're looking at there, primarily going to be your credit score. What has been your repayment history, both individually as well as business. We'll also look at public records out there. Do you have any collections, judgments, bankruptcies, things like that? Capacity is your repayment capacity. So what is the cash flow that's coming into this relative to the loan payment out there? If you are renting to an oil field service company, what is the rental income on a monthly basis relative to your loan payment? Typically, we look at a minimum of a 1.25 debt service coverage ratio. And what that means is, let's just say your payment was $1,000 a month. Take that times 1.25. That's what you would need on a minimum rental income basis to meet that criterion. Capital is going to be what you've got for cash coming into the deal, so that 10, 15, 20, 25% down payment that's coming into the transaction. And then also what other capital or cash liquidity that you might have, whether it be in mutual funds, stocks, cash that you have personally in your bank accounts. Lender's going to request a personal financial statement from anybody that owns at least 20% of the business. And really what we're looking at there is, what's the secondary source of repayment? If all of a sudden ABC Trucking that you were leasing to files for bankruptcy and they're no longer making their lease payment to you, what other resources do you have to make that loan payment? Collateral from a liquidation standpoint, if it ever gets to that point, what's the collateral? What's the value of that collateral to repay the loan if you have to sell the collateral, or if the bank has to take the collateral back and sell it to repay the outstanding debt balance? And then finally, conditions. What are the general conditions surrounding the transaction that you're working on? We'll use an apartment building as an example. Some things that we would look at: what's the vacancy rate on that apartment building? Are there a lot of vacant units? What's the overall market conditions? Is there a lot of vacant units at other complexes in town? Building permits, is there a bunch of apartment buildings that maybe are under construction that's going to bring a glut of supply to the market that could increase the vacancy rates at the property that you're looking at buying and or push down rental rates into the future? Or conversely, if there isn't any new projects coming online, apartments are already at 100%, you've got a power plant that's looking at bringing in 1,000 workers to construct it, more than likely that's going to push up the demand for those types of units. All right, next slide, please. So finally, how to make your deal bankable. Everybody's going to look at the 5 C's of credit. So these are some tips and tricks, I would say, that gives you the edge, so to speak, when you're sitting across the table from the banker trying to sell them on your deal. First, you're going to need to compile the necessary documents. Come prepared. Every bank's going to ask you for your tax returns. If you have an operating business, your business tax returns, your personal tax returns, a financial statement, which is going to list your assets and liabilities. If you are looking at trying to acquire a property that's currently leased, bring a copy of that lease agreement. Know that lease agreement. There's lots of nuances to lease agreements. Is it triple net? Is it just a gross lease? The more that you can communicate to the lender on the details, it shows that you're prepared. You've done your research. You really know the deal like the back of your hand. And that goes to the second point. Know the numbers. We get lots of deals that come in and, well, we want to do this, and maybe it's a new construction project, and, well, it's going to cost $2 million. Well, how do you know it's going to cost $2 million? Well, we don't have any quotes yet. Get all your quotes together, make sure you're prepared, know the numbers, and make sure that you factor in a contingency to that. Things never quite go 100% perfect. There's always unforeseen costs, whether it's a new construction project that costs more, whether it's an apartment building that you get into and now you've got a pipe that breaks, you've got unforeseen maintenance costs. You want to factor that in because, believe me, it will happen. In terms of if it's a new project and or maybe it's a value add where you are looking at increasing rents, things like that, bring in information that's going to justify your projections. And what I mean by that, we'll use the apartments as the example again. Do some market research out there. It's very easy to go on Zillow, Realtor.com. Bring in that comp information that justifies if you're going to get $1,500 a month for a 2-bedroom apartment, show the data that justifies that. Same thing on the operating expense side. Know the numbers. What's the real estate taxes? You can look that up online. Get quotes from your insurance agent to justify your insurance costs. And sell your story. I think that's sometimes hard for people to do. Don't sell yourself short. We always like to see resumes that show your experience level in the particular project that you might be looking at doing. And if you don't have any experience, that's not a deal breaker, but as Erik mentioned, maybe start small. Surround yourself with people that maybe have that experience, and you can come into that first deal maybe at a smaller level that will then be the pedestal to the next deal. Have a contingency plan and communicate that to your lender. Communication is absolutely vital up front and then ongoing once you get into the deals. Things are going to take twists and turns, and things might be tough, but if you communicate along the way, typically you can work through those issues. All right, next slide, and I think I turn it back to Erik.
All right, thank you, sir. Good job. Everybody thank Chris for coming up there. I told you that he knew more about finance and banking than anybody that I've ever met. You can tell. He's the guy that sends our banker emails. Hey, by the way, this is what's going on. All of our rents are coming in. We're this much higher than we thought on our projections. And I asked the banker last week when we talked, I said, does anybody else do that? He goes, oh yeah, I have to beg them for what happened in the last 2 years. Chris is telling us stuff in the future that we haven't even thought about yet. So I certainly appreciate that. We're gonna now talk about advanced strategies in real estate. How many people in here have ever bought or sold a property? Okay, how many people have ever bought or sold an investment property? Okay, all right, pretty impressive group, so thank you. We're gonna talk about advanced strategies. It's not how much you make, but how much you keep whenever you go to sell an investment, right? We're gonna talk about 1031 exchanges. Anybody do a 1031 before? Okay, a few hands up, so we'll talk about that. How about a cost segregation study? Anybody hear of any of those? All right, wow, one in the group is pretty good. I was in a room in Miami with 600 of us, and I was the only one that had ever heard of one, so that's pretty cool. And then, how many of you currently have a real estate license? Wow, more than I thought, so that's good too. All right, next slide. So 1031 exchanges, for those of you that have never heard of them, allows you to essentially kick the tax can down the road upon your sale. So instead of you buying a property and having to pay tax on it right away and have less money to invest and roll into the next one, it allows you to defer the capital gains into the future. And under current rules, you can just keep doing 1031 exchanges until you pass away, and then your heirs would receive a stepped up cost basis upon your death, right? So that is the design of the 1031 exchange. The first thing you need to do, unless you're doing a reverse exchange, is to sell your property. Immediately upon coming under contract, you're gonna wanna have a conversation with your real estate agent. In a 1031 exchange, you cannot have receipt of any of the money. You need to find what's called a QI, or a qualified intermediary, that's gonna hold these funds after you sell an escrow until you find the new replacement property. The good news is the one that we use is 701 Title. They're right here in town and they can handle that. While you're in the process of selling that, you're gonna wanna identify another property. You can roll into multiple properties, but it has to be of like kind. In other words, the same amount of money. You can have a condo and then buy a single family property. Like kind means in real estate. So you're gonna wanna choose potential properties to purchase and make sure that you're following the rules. If you get kicked out of a 1031 exchange on an audit, it typically happens very rarely, but it happens after the fact, you're gonna be held responsible for interest, taxes, and penalties on any of the money that you didn't pay tax on. Nobody wants to have to pay 50% of your gain if you don't do it the right way. You then, step number 3, are gonna purchase the property. You have so many days to identify the properties. You're gonna make a list of said properties. You then have to close on one in a certain amount of time. And then in order to officially complete the exchange, the QI will submit all the proper paperwork to the IRS to make sure that all the I's are dotted, T's are crossed. And if you do it the right way, it will allow you to defer capital gains tax and not have to pay it right now. I happen to be in that case. We bought a property for $1 million actually, $995 after a sale credit, a seller paid closing cost. Bought it for about $1 million. We're in the process of selling it for 1.6. That's a $600,000 capital gain. Think that we're gonna pay 20% of that to the IRS and some more money to the state here. You imagine out of every $4 that we make, we're now gonna pay tax, which would be in this case $125,000 right out of our pocket. And instead, we're in the process of doing a 1031 exchange to buy another property. Now that $125,000 goes to work for us immediately. We don't send any of it to Bismarck. None of it goes to Washington to blow, and therefore 100% of our 1.6 gets invested into the new property of similar or like debt. So pretty powerful. If you haven't done it, we can help you walk through it. We are not qualified tax attorneys, but the good news is we know really good ones, all right? Benefits of a cost segregation. For those of you that don't know, the good news is under the big beautiful bill, one of the best things that happen to real estate investors is what they call 100% or bonus depreciation. It allows you to speed up all of your depreciation instead of a 25 or 39 year life cycle. A cost segregation engineer will fly out to North Dakota. Very rarely do they come out here. And they're gonna go through your building and your property. Imagine this arc. They're now gonna cost seg every single thing that you see, any fixture, any equipment, any HVAC, any flooring. And instead of depreciating that over 39 years, they will break it down on a form that you send to the IRS. They'll do this study for you, and it allows you to take 5-year life on some of it. And in some cases, on that 5 to 7 years, have a giant difference in your properties. We've done several of them, and in each case it saved us over $100,000 right to the bottom line for our investment group, which really is a lot of money and makes a lot of these deals because of high interest rates that we're not penciling otherwise. If you do a cost segregation study, pay the $5,000 to $10,000, you're gonna save $100,000, $200,000, $300,000 just in tax and reduce all of your gain. And you can go back in time. If you bought this property, let's say 5 years ago, the IRS allows you to do a look back without amending your tax returns. It's the most powerful tax savings that you have in real estate that none of you have ever heard of, and we have a really good person that can help us with that. I happened to be in Dallas for an investment mastermind earlier this year. We got a private tour of the Cowboys football stadium, Jerry Jones's world. They built that thing for $600 million. They're putting another $300 million into it. I'm a Minnesota Vikings fan, so I hated every single second of it. If you remember the Herschel Walker trade, it cost us 3 Super Bowls, and I hate their guts.
Go Cowboys.
No, yeah, we hate the Cowboys. But while I was there, I met a guy in the back of our van that was a speaker at this event the next day, and we hit it off. His company specializes in these cost segregation studies. They've done 26,600 of them around the country. There's only 3 states they haven't done one in, and one of those is North Dakota. So he's planning on flying out here to do one of those for us. So if you own an investment property, if you own a building specifically, there's a lot of the depreciation you can speed up and save a bundle of money in taxes. And then basically that goes to the bottom line to offset your income and is really powerful. We'll say $5,000 to $10,000 depending on the size of your building, but if you could save $100,000 to $200,000 in straight tax, that's good math, all right? And it reduces your tax liability on earnings and gives you more cash flow coming in because you have less money that you're paying in tax, all right? Any questions on that? Super advanced, but I wanted you to know about it just to say that you heard it if somebody ever asks you. You'll remember this room and this conversation, all right? Okay. The next thing I could tell you is to get a real estate license. I may be biased, but if you've seen the new big beautiful bill and all of the write-offs that we now get being a real estate professional, get your darn license. If for no other reason than only and specifically to do your own real estate deals, it's gonna save you 3, 4, 5, 6% in commission by having a real estate license. Certainly if you don't want that money in your bank account, I would gladly take it, but I would rather have you have it. Cami, how many real estate deals did our team do personally last year?
Over 200.
Yeah, I mean of our own, like of our own. We did 279, we already discussed that, but how many did our team do where somebody on our team used their real estate license to buy their own properties and not have to pay a commission?
Not including you.
I'm saying everybody, I'm on our team. Like, I count, don't I?
I would say probably about 15, 16.
Okay, the number's 34, so we need a new COO. The good reason is we have somebody that does the work for her now, so she's got like, how many assistants you have? You'll know that number, I bet. You have 15 assistants. Okay, we'll ask one of them next time. Anyway, our team last year did 34 personal real estate transactions. Either they were buying a house, buying an investment property, buying something for their own. We're the only team that I know of that doesn't charge a personal real estate commission to the house. So if you're on our team, we don't charge you. Why? I would rather see that money go into your pocket so you could buy more real estate. But for no other reason, get a real estate license so that you can get in the MLS and find the deals and know about when they hit. Find out exactly all the history of the property. And a lot of our deals we're doing are off market. A lot of the stuff that we're buying doesn't even ever hit the MLS. So if you truly want to find the gold that's out there, get a real estate license that for no other reason than that, and get a license now so you can make a lot more write-offs and take some more home exemptions in your house because of that. And if your primary business is real estate, you would not believe the write-offs we get. That's what happened when your president made all of his money in real estate. Honestly, that's why. Okay, social engineering. All right? Lastly, why choose us if you do want to hang your license? Because we don't charge you. We do a lot of deals. We have a lot of fun doing it. We're not here to pitch you to get your real estate and join our team. But more than anything, if you need help in real estate, we can help you with any and all of your real estate needs, business needs, anything else related to that. Okay? And that's all the information that we have. We'll leave it open for questions right now. And then really, I want to find out more about what kind of stuff you're looking for. And we'll leave that up there so that you can scan it. And then that way you'll be able to have that exact presentation with all of the slides. Yeah, just 2 more things and then we'll let you guys break. We love educating and masterminding and getting like-minded people in the room. We've been hosting now for the last 5 years a business mastermind. We just met this morning, but we're going to do a specific one for real estate starting October 1st, 9 o'clock in the morning at First State Bank right downtown, his bank in the conference room. It's October 1st. We'll send you all that information out through your email that you signed up for today. Come one, come all. It'll be a great way to get us all together, talk investing deals. We can talk about all the different strategies to investing. In the meantime, our information is right there. It's easy to find. If you have any questions, we'd love to meet with you individually and see what we can do to help you out. And then finally, one of the big frustrations as a real estate guy is we've had about 20 deals this year blow up because of light appraisals, bad inspections, or houses that just couldn't get across the finish line for various things, either loan, appraisers, inspectors, all that. So Chris and I started a company called Cash for Keys. It's kind of catchy. Remember Cash for Clunkers, so we didn't really change too much of that. But we're looking at buying properties that can't qualify for other traditional financing or that have distressed or motivated sellers. How many properties have we been into in the last 3 months in town?
Dozens.
I would say 40 to 50 properties we've toured. Our buy box is looking in that 300,000 and under, 3 bedrooms, might need a little bit of work, but not major work. And then people that are looking to sell, we want to then turn those into single family rentals, build an investment portfolio and sell it all out. But anyway, there's a lot of these properties that are just too much work for us, or we just can't take them all on. If you guys are interested in that, send me a private email. We'll get you on a list. And any properties that we're not taking down, we'll certainly give you first dibs on. My email address is Erik at Proven Realty ND, and it's Erik with a K. But if you scan that or go to our website, Proven Realty ND, it'll connect us. But if you're looking and you have a buy box, we'll have a form on our investing website that will have all of your criteria. You just pop that in there. We'll keep track of deals, and we will send you off-market deals when they pop and help you out. And then certainly if you're looking to buy or sell anything, we'd love to discuss that as well. But that's all we got, unless there's any other questions. Going once?
Food.
Oh yeah, and there's a whole bunch of really good food. We got smoked chicken legs there. Jacob Watson, the best inspector in town, made those. We also have pulled pork and a whole bunch of salads and other stuff. So we'd love for you to stay around, chat, ask questions, converse, and more than anything, just mastermind with people around you to help make us all better. And we're gonna do these types of events quarterly, so pay attention to the next one. We'll get a bigger room. We wanna do it in a big way, and we wanna do anything that we can to help you, and specifically this community make better decisions. Some of our really good friends in Detroit, Michigan, we went out there for a memorial a couple weeks ago. When they got into real estate, Detroit had just gone through bankruptcy and their home ownership was only 32%. They made it a goal to get that number up as high as possible. And this team over there now, it's 54% home ownership rate in Detroit, Michigan. So our goal would be to get as many people in investment properties and houses just like you, cash flowing, so that way we can have better quality of life. Or come see us in Arizona in the wintertime and we'll do some investing deals down there when you're too cold. So otherwise, that's it. Thanks for coming. Hopefully we get a chance to chat later. And if there's anything we can do, please let us know. Thanks again.
Thank you.